Good morning. Thank you for joining today's daily webinar here at 10 a.m. Pacific time. As a reminder, we go live twice a day, once at 10 a.m. Pacific time, a second time a few hours later at 1 p.m. Pacific time. Here's where we go over your questions. We also cover certain topics. Today, we're going to talk about the self-directed solo 401k as far as how it's a smart money move. Specifically, it's also known as a self-employed 401k. So we'll go over that and also your questions. So that being said, you can always follow the conversation on our community site, which is my solo401k.net /my community /forums. Feel free to post your forums to post on the forum. You don't have to be an actual client or a member to join. It's all free to join. So today's presentation is for informational purposes. We're not soliciting investments. We don't sell investments. We don't provide investment advice or tax or legal advice. So it's for educational purposes. And we'll ask questions as we come up to that. So with the self-directed solo 401k plan, let me share my screen here. I'm going to talk about the benefits. So what makes the solo 401k a smart money move is the several features within the plan, such as the different contribution types, including the ability to roll your solo 401k tax-free by making Roth solo 401k contributions. You can also make high pre-tax contributions for those looking to lower their taxable bill for the year. And that's done by making pre-tax contributions. And if you're really looking to supercharge your tax-free 401k, you can utilize the Mega Backdoor Roth Solo 401k piece. So a solo 401k has higher contribution limits than an IRA. For instance, with a solo 401k plan, you can contribute as much as $70,000 for 2025. That's the overall contribution limit. And if you're age 50 or older, you can contribute an additional $7,500. And it looks like we've got a good question here from Salim. I will be 60 in December of 2025. How much is my catch-up contribution? Great question and timely asked, because that's what we're about to talk. We're going to talk about that right now. If you look at this particular slide here, there's a super catch-up contribution amount that's effective for tax year 2025. So anyone that's age 60, 61, 62, or 63 in 2025 can make a catch-up contribution of $11,250 instead of the $7,500 catch-up. So as this slide here demonstrates, that super catch-up is only available for those who fall into that age category I mentioned there, 60, 61, 62, or 63. Therefore, if you make that 70,000 voluntary and after-tax solo 401k contribution, and then you also make that $11,250 catch-up contribution, that's a pretty smart money move there, because now you're going to be able to contribute $81,250 to your solo 401k. And if you make that all as a pre-tax contribution, you're going to reduce your taxable income for 2025 by $250. That's if you make it as a pre-tax contribution. On the other hand, you could choose to chop it up a little differently. You can choose to make the 70,000 overall limit contribution to the voluntary after-tax solo 401k, for example, and then convert it to the Roth solo 401k. That's another example of its smart money move. Utilize it as solo 401k plan. And if you have enough net self-employment income, you can treat the $11,250 as a pre-tax contribution, or you can put it in as a Roth solo 401k contribution. You'll probably see why the solo 401k is oftentimes considered a smart money move. So hopefully that answers that question. Let's keep talking here about the solo 401k plan. What makes the solo 401k plan a smart money move as well is that if you have two participants in the plan, let's say you're married and you and your spouse both work in the same self-employed business, you would each participate in the same self-directed solo 401k plan. The solo 401k plan is sponsored by the self-employed business. For example, if you both work under an LLC and you both receive W-2 wages from that self-employed business LLC, you can each contribute to the solo 401k plan. This slide here gives you an example whereby the LLC self-employed business sponsors the plan. So just one plan. You have two participants, for example, both spouses. They each have separate holding accounts under the plan to hold their respective funds and fund sources, such as pre-tax, Roth, and voluntary after-tax, resulting in 6 holding accounts, aka bank or brokerage accounts, for one solo 401k plan. Therefore, each spouse, if they have enough self-employment income, in this example, the LLC is taxes and S corp. If they each have enough W-2 wages, they can each contribute as much as $70,000 for 2025. So if you multiply it times 2, that's 140,000 between both spouses. What is more, if both spouses are age 50 or older, they can each contribute an additional $7,500 a catch-up contribution. Or if they are in this age category of 60, 61, 62, or 63, they qualify for that super catch-up contribution amount of $11,250. So each of them can contribute that amount. So that's another smart move using a single 401k plan. Okay, let's take a look at another question here. That means I can start contributing catch-up contributions from January 2025, even though I am not yet 60. That's exactly right. As long as you turn 60 by the end of the year. So you need to turn 60 by December 31st of 2025. So then you can make contributions, including catch-up contributions now through December 31st of this year for 2025. Or if you file for an extension for 2025 for your business tax return, you're going to have until 2026 business tax return due date plus time we filed extension to make your 2025 contributions, both the catch-up and the regular contributions. So that also makes the solo 401. That's another example of why a solo 401k is a smart money move. You can delay making contributions till the following year on your business tax return due date plus timely filed extension. For instance, many clients are still making 2024 contributions for 2025. They're still making 2024 contributions for 2025. So they can contribute $69,000 by their business tax return due date plus timely filed extension for 2024 here in 2025. They can also make that catch-up contribution of $7,500 for 2024 for age 50 or older you can see that they do not qualify for the super catch-up contribution for 2024 because it's not available until 2025, which is part of the Secure Act 2.0. Okay, let's keep moving on here. The solo 401k plan also qualifies for the auto contribution feature. So that's another smart money move because you get a $1,500 auto contribution credit just for opening a solo 401k plan. That $1,500 contribution credit is a way of the government essentially subsidizing the self-employed person's retirement plan. That is a solo 401k plan. The government obviously is concerned with individuals not saving enough for retirement. So the self-employed have that option of contributing to a solo 401k plan. And by opening a self-directed solo 401k plan with my solo 401k financial, we're going to include that auto contribution credit in the plan documents. And you're also going to have to sign some documents in conjunction with those adoption agreement plan documents. What's great about the auto contribution credit is that it's a flat dollar credit. It's $500 per year for a total of 3 years, resulting in a total amount of $1,500 during that 3-year period. And not all solo 401k plan providers out there will provide a solo 401k plan that offers the auto contribution credit. The auto contribution credit also, you're not required to make contributions to the solo 401k plan in order to qualify. You're required to have a plan document that has that feature built into it, and then you sign specific documents. And you're going to use Form 8881 to claim that auto contribution credit. You file that form each year for $500. So, for instance, anyone that opens a solo 401k plan here in 2025 will qualify for that auto contribution credit starting in 2025. So that's $500. And then another $500 in 2026, and a final $500 amount in 2027. Also, if you're an existing solo 401k client, we can update your plan to allow for that auto contribution credit so it can be added to your plan. It was not available until the end of 2023, once the IRS updated Form 8881, which is the form used to claim that auto contribution credit. Therefore, any client that signed up for a solo 401k with my solo 401k financial prior to December of 2023, their plan will need to be amended and this auto contribution credit can be added. You can submit a support ticket on our website so that we can add that to your plan. Let me send over that support ticket page. Okay, here's the support ticket page if you want to have that auto contribution credit added to an existing solo 401k plan. Okay, let's keep on discussing here how a solo 401k is a smart money move. Give me a moment here. Let me get to those slides here. Let's talk about the Mega Backdoor Roth Solo 401k. The Mega Backdoor Roth Solo 401k makes the Solo 401k a smart money move because you can really supercharge your retirement account savings by utilizing the Mega Backdoor Roth Solo 401k strategy. This is where you make your full annual contribution to the solo 401k plan up to the overall limit of $70,000 for 2025, for example. So you would make the $70,000 contribution here to the voluntary after-tax solo 401k bucket. And then you would immediately convert that to the Roth solo 401k bucket, so the full $70,000, or you can convert it to a Roth IRA instead. So that's a good way of really supercharging your after-tax funds because it ends up in the Roth solo 401k plan after you process that conversion. There are certain steps that need to be followed when executing the Mega Backdoor Roth Solo 401k strategy. Account on the plan those voluntary after-tax funds. We assist our clients with opening the bank or brokerage accounts under the Solo 401k plan. Then you're going to make that annual contribution to the voluntary after-tax Solo 401k bucket. And then you're going to convert it to the Roth Solo 401k or the Roth IRA. Subsequently, you're going to fill out a conversion form on our website so we collect the necessary information to complete the Mega Backdoor Roth Solo 401k strategy by reporting it to the IRS by filing Form 1099-R with the government. So that's what makes the Mega Backdoor Roth Solo 401k plan such a smart money move. Okay, let's take a look at some more questions here. And then we'll come live again here at 1 p.m. Pacific time. So you can join at that time if you didn't have a chance to ask your questions tonight. Here's a follow-up question. My max is $81,250 for 2025. Do I contribute pre-tax of $61,750, post-tax deduction, deposit to Roth, or voluntary contribution? So what's great about the contributions to a solo 401k plan is that you get to choose how to make those contributions. In other words, you can choose to make them to the pre-tax solo 401k bucket. You can choose to make them to the Roth or to the voluntary after-tax solo 401k bucket. So here's the different buckets here. 3 different buckets. You can also choose to do it in combination. For example, and again, you need to have the necessary net self-employment income from your self-employed business to justify the contributions. As an example, you could choose to make your entire pre-tax solo 401k contribution of $70,000 to the pre-tax solo 401k bucket. And if you're age 60, 61, or 62, or 63, you qualify for that $11,250 super catch-up. You can choose to make that to the pre-tax solo 401k bucket or to the Roth solo 401k bucket. You cannot make it to the voluntary after-tax solo 401k bucket because the rules don't allow for voluntary after-tax solo 401k contributions to be made as catch-up contributions. So that's why you've got that 70,000 overall limit on the catch-up contribution for the Mega Backdoor solo 401k strategy. Another way of doing this is you can say, well, I'm going to go ahead and do $70,000 as a voluntary after-tax contribution. I'm going to convert it to the Roth Solo 401k plan. Subsequently, I'm going to make an $11,250 super catch-up contribution to the Roth Solo 401k, or you can make it to the pre-tax Solo 401k bucket. So those are some examples there. Okay, so let's look at a couple more questions here, and we'll be done with today's webinar here at 10 a.m. Pacific time, and we'll be back again here at 1 p.m. Pacific time. So here's another question here. If I invest via my solo 401k and receive 1099 INT, am I required to file a tax return using the solo 401k trust EIN, even if no tax is due for a Roth solo 401k? So it sounds like you made some type of investment with your solo 401k plan, and you received a 1099 INT. That 1099 INT is going to be for your records. You don't file that with the government because it's issued in the name of the solo 401k, and the solo 401k is a tax sheltered vehicle, which means that no taxes are due until you make distributions from the plan. If we're talking about pre-tax solo 401k funds, of course, if we're talking about Roth solo 401k funds, then it's going to grow tax free. So let's be sure this post here from our website that talks more about the 1099 INT, but in sum, it's for your records. Just make sure it was issued in the name of the plan using the plan's EIN number. Let me send over this link here from our website that covers that topic. There it is there. Okay, another question here. I have an existing plan with another company. I am considering moving over to you. Can I schedule a call with someone today instead of waiting until next week? The Allen Tyler will not give me options this week. Question, I'm very busy this time of year. We are constantly opening up new plans. We're restating plans. So we don't have any calls available for today, but we can get you on the calendar tomorrow, Friday. Therefore, go ahead and send us an email to business@mysolo401k.net. Put your name on the subject line and list on there what time you would like a call tomorrow, and we'll take a look at the calendar. But yes, this time of year, we're busy opening up solo 401k plans, and we'll take a look at our calendar for tomorrow. But go ahead and send an email to business@mysolo401k.net. Okay, so thank you for joining today's webinar. Again, we'll be live again here at 1 p.m. Pacific time. Until then, have a great day. Bye-bye.